Hey guys, Mike with Highlands Residential Mortgage here, NMLS 1857587. And today I want to go over with you something that Governor Ron DeSantis signed not too long ago, a Hometown Heroes Down Payment Assistance Program. And this program is going to provide down payment assistance up to 5% down, not to exceed $25,000 for eligible occupations throughout Florida. And that's going to include some occupations like teachers, law enforcement, dentists, anybody in the medical field, anybody in the education field. They're going to be able to get this down payment assistance. And we're going to actually go in depth on what are the different occupations and how you are going to be able to know whether you qualify for this program if you are a client kind of trying to get into this. So we'll jump right into that. 4 eligible occupations throughout Florida. And that's going to include people within the medical field, dentists, pharmacist technicians, law enforcement, anybody in the educational field, school care instructors, teachers, different occupations like that. And we're definitely going to go over every single occupation and how to find out whether you would qualify for this program or not. So this program, like I mentioned, is up to 5% down payment assistance, and it's a 0% interest rate second mortgage. Now, what does that mean? A second mortgage is essentially a mortgage or a loan in this case that you will eventually have to pay back. The 0% part means that you are not paying this monthly. Okay, you do not pay this. It's not added to your mortgage payment every single month when you receive it. You will only be paying your mortgage payments off of your first mortgage, whether that's an FHA loan, conventional loan, or VA loan. That 0% interest second mortgage, that's this down payment assistance program, is essentially whenever you sell, refinance, or move out of this home as your primary home, you will essentially have to pay this money back at that time. And that can be in 3 years, 5 years, 10 years, 15 years, 20 years. Think about it like someone's lending you money now up front and saying, you know what, pay me back when you can. That's kind of the same situation here in this case. A lot of people have bad stigmas when it comes to second mortgages because it's not a grant, it's not completely forgivable. Guys, this is still a very good program because right now what we're seeing in this market is people are short cash down payment and closing costs. And if you're coming in, especially in that South Florida market, but even all over Florida, we're getting people from out of state that sold their home and they're coming in and they're outbidding first-time home buyers that saved up just enough for the transaction and now are obligated to pay a little bit more or don't have the flexibility to be able to repair the property when they come in and different things like that. So even though this is a second mortgage, I don't want you to look at it with a stigma because it is still a great program and it's not something that is going to affect your monthly payment. In fact, this program is advertising below market interest rates right now. So you may be shopping around currently or you may be looking into buy, but you are kind of afraid because of that interest rate that you're going to be receiving. Well, the good news is that this program will have below market interest rates. So you'll be coming in at essentially at a discount of what this current market is. And on top of that, be able to get that down payment assistance to help you get into your first home. And I do mention into your first home because this program, specifically this down payment assistance program for Hometown Heroes, is only for first-time home buyers. Okay, so if you've owned a home within the last 3 years, you will not be able to qualify for this program. And that's all the first-time home buyer is. If you owned a home in the 80s and the 90s or even 5 years ago, let's even go as early as 4 years ago, and you sold that home and you've been renting since then, as long as you haven't been on title on a home within the past 3 years, you do qualify as a first-time home buyer, okay? So you don't necessarily, technically, this doesn't have to be your first home, but you cannot have owned one within the past 3 years, okay? So you do definitely have to be a first-time home buyer. Now, some eligible occupations, as you see, sworn law enforcement officer, a certified correction officer, a correctional probation officer, and the way that you find out and the way that the lender's going to find out whether you qualify is going to be through these direct links that we're seeing here. Okay, you can be a juvenile detention officer, a juvenile probation officer, a firefighter, and you'll be able to find out if you qualify as a firefighter through that link. You have to have some sort of license or certificate to be able to qualify. And very important before we continue to scroll down here It says here participants must be employed full-time and currently employed in a position in which their license or certification is held. Okay, what does that mean? That means that you cannot say that you were a firefighter 3 months ago, 4 months ago, and you're on leave and you haven't been able to find a new job. You have to be full-time and currently employed in a position, in any of these positions, in order to qualify. Okay, so we're going to get back into the eligible occupations, because there's in total there's more than 50. I think there's about 70 in here. Okay, so certified paramedic, certified emergency medical technician, 911 public safety communicator, certified educator to include classroom teachers, career specialists, a librarian / media specialist, school counselor, a social worker, a school psychologist, okay, licensed childcare operator. So you do not have to be a W-2 employee. If you are self-employed and you are approved by the state, Florida, to be able to operate a childcare facility, you can qualify for this loan. Licensed childcare operator. So you can definitely be self-employed, own and operate a childcare facility, and still be able to qualify for this loan. Okay, you can be a childcare instructor. And note here, you have to be employed by a licensed childcare facility or registered or licensed home childcare provider. So you do have to be under someone that is licensed and approved, registered by the state of Florida. You can be a registered nurse, a licensed practical nurse, a certified nursing assistant, home health aide employed by a licensed home health agency. Okay, healthcare practitioner, which includes physicians, physician assistants, and anesthesiologists. There are so many different occupations on here. This is going to be more than 3 million people in Florida that are going to be able to qualify for this. So we'll continue going, because we may have not even hit your job description yet, right? Certified medical assistant, acupuncturist, osteopathic physician, chiropractic physician, podiatric physician, pharmacist, pharmacy technician, a dentist, a dental hygienist, a certified nurse midwife. You can do speech language, pathologist or audiologist. You could do pathology assistant or speech language audiologist assistant, a nursing home administrator, occupational therapist assistant, respiratory therapist, licensed dietitian or nutritionist. I know a lot of people right now that are in the industry that are health and wellness coaches, and they are certified and licensed with the Florida Department of Health, and they will be able to qualify for this loan as well. You can be a licensed nutrition counselor, an athletic trainer. A lot of my friends are athletic trainers. If you're listening to this video right now, you can qualify for this loan. Orthotist, a prosthetist, an orthotic fitter, an orthotic fitter assistant, an electrologist, a massage therapist, a clinical laboratory personnel, phlebotomist, licensed medical physicist, certified basic x-ray machine operator, a certified radiologic technologist, certified radiology assistant, certified general radiographer, specialty technologist, optician, hearing aid specialist, physical therapist assistant, a psychologist, a clinical social worker, marriage and family therapist, a mental health counselor, a veterinarian assistant or technician, and last but definitely not least, active military personnel or a veteran. Okay, so you are considered a hometown hero as well, especially you guys, if you are a veteran or you are active military personnel, you will qualify for this. And the reason why I kind of go over this list is because even though it's a very long list, there's so many different occupations on here that you listening, if you're in the medical field, and you heard me say, if you are literally in the medical field, or you do have a high chance of being in here earlier in the video, well, here it is. These are all the occupations. And the way that you know that you qualify is you do have to be licensed or certified directly with the state of Florida. That's really the only requirement when it comes to these professions, okay? You do have to be licensed and certified. Now, the first mortgage programs that are offered within this program is typically government programs like FHA, VA, USDA programs all fall into this. You can also do conventional loans, whether it's through Fannie Mae or Freddie Mac. Pretty much any sort of conforming loan is what we like to call them. A conforming loan is basically anything that's essentially regulated by the government, right? Put out by them specifically, with these rules and regulations, with a conforming loan. And a conforming loan is essentially those that I named out, right? A non-conforming would be something like a bank statement program. Maybe you're self-employed and you don't file taxes correctly. You're not going to qualify for this loan. But typically, a lot of these are W-2 jobs. And so if you are W-2, you don't necessarily have to worry about these non-conforming loans. As long as you have decent credit, which we're going to go over that minimum FICO and things like that, you should be good to go. Some of the program requirements that we're looking at, the income limits, okay? So this is going to depend on your county. And I'm just going to go over quickly some of the main counties throughout Florida. So you've got Broward County. That income limit is $136,050, okay? So as long as you do not pass $136,050 and you live in the Broward County, or you're going to be buying in the Broward County, you will qualify. Collier County, $141,450, okay? You could be looking at Glades County, $118,950. You can be looking at Highlands County, same thing, $118,950. Lee County, if you're up there, $120,600. Miami-Dade County. Typically, Miami-Dade and Broward, when you're looking at these down payment assistance programs, they're right there when it comes to income limit. Miami-Dade actually has a higher income limit at $146,250. And so these kind of go on, and you can see them here as we kind of scroll down. The income limits are to the left of that, okay? And you can look at Monroe County at $153,750. You can look at Okeechobee County, Palm Beach County, $138,000. St. Lucie County, $120,000. Okay, so these have, and the point I'm trying to make when I say this is that these have very high income limits. A lot of times, if you're looking at these programs, they don't allow these limits. Okay, these limits are usually over the allowable, and it depends on that down payment assistance program, of course. But if something like this comes out, you're typically looking like, well, you know what, I make $80,000 a year, I'm not going to qualify. Well, no, that's not the case. You're going to be able to get a good pre-approval, and you're going to be able to get your down payment and your closing costs covered through this program, because they're really taking care of their hometown heroes with this. And the other thing that I kind of want to switch over is that second and third column. Okay, these are the loan limits. So these do not have purchase price limits. They have loan limits, which means that you can go over these limits on purchase price as long as your loan doesn't pass it. And the funny thing is that these are the maximum loan amounts anyway within these counties. Okay, so for Broward and Miami-Dade, that maximum loan limit for FHA is $460,000. Well, they're basically saying if you qualify for an FHA loan and you're in Broward County and you make less than $136,000 a year, you have a very high chance of qualifying for this program, right? Same thing on the conventional side, which is that HFA preferred, HFA advantage, and VA side, right? That has a much higher limit because those loan limits are much higher. The only one that really technically would have a restriction is the VA, because the VA doesn't necessarily have a loan limit. So for you, those of you that don't know, if you were to qualify for a VA loan and you were to just do a VA loan by yourself because you're a veteran or active military personnel, if you qualified for $1 million, the VA would lend you $1 million as long as you qualified for it. So the VA is the only one that technically has a cap, and their cap is with the regular conventional cap at $647,200. And these are loan limits, okay? And I kind of stress this point because it doesn't mean that you cannot purchase past 647. You can. You can purchase at 650, at 655, okay, even at 680, 700 if you wanted to, and still be able to get into this program, because as long as your loan limit doesn't pass this amount, which means that the money that you're going to borrow from the bank doesn't pass that, you're going to be okay and you'll be able to qualify for this loan, okay? And so now jumping into the minimum FICO that I think is very important that we kind of go over. Your minimum FICO is a 640 on an FHA or even on that conventional as well, okay? And you can go, there's two different tiers typically with this program on your FICO. So this is very important because a lot of people, they do like to stretch out their pre-approvals just a little bit. And some people are very conservative, right? If you're at a 640 credit score, you have what's called a maximum debt to income ratio in this program. Your maximum debt to income ratio, if you are at a 640 or 660 credit score, is 45% debt to income. And so for those of you that don't know, your debt to income is basically how much you make divided by your total overall liabilities, which includes that mortgage that you're going to take on, as well as anything that's on your credit report. So they're not going to let you pass that 45% debt to income ratio, right? Now, if you're above 660 and you're in the 680 range, if you're 680 and above, at that point you have flexibility up to 50% debt to income ratio. So half of your monthly gross income can go towards your mortgage and your liabilities within this program, and that's going to give you a little bit more wiggle room than someone with a slightly lower credit to be able to qualify for or get a higher purchase price limit on these loans. Okay, so very important that you kind of note that, because 640 is the minimum FICO, but obviously if we can get you up to something a little bit better than that and help you with your pre-approval, we absolutely will. Okay, now another question that we would get is, can you have a co-borrower or a co-signer, which is essentially a non-occupying co-borrower? The answer to both those questions is yes. You can have a co-borrower and a co-signer as well, depending on what your situation is. So they don't necessarily have to live in the home with you. They can be on the mortgage and help you with your qualification, which is something that we're seeing a lot of in this current market that we have right now. So you definitely can get a co-signer within these programs. And it doesn't necessarily matter what program you're in, whether it's FHA conventional or VA or USDA, all of them will allow you to have a co-signer. Now, can you buy this home as an investment property? No, you cannot. Unfortunately, you have to be living in this property. It has to be your primary residence. As soon as they find out that it's not your primary residence because your address has changed on your driver's license or your home is not homestead, they will require that you pay that second mortgage back. So this has to be a primary purchase. Is there a minimum borrower contribution? No. So that means that you can get 100% of the down payment and closing costs through this program, and you do not have to come in with a cent. Okay, so you can essentially get everything through here. Okay, a lot of people still have this question, and it's very valid because of what happened before back in the past. And that question is there a prepayment penalty? Well, not only does this program not have a prepayment penalty, 99% of the programs that are out right now do not really have prepayment penalties. If you're buying something as a primary home, you do not have a prepayment penalty. Okay. What kind of property types are allowed with this program? Well, you can do a single family home. That's standard, right? You can also do a condo with this program, whether it's FHA, VA, USDA, or conventional. You can do a multifamily with this, okay? So 2 to 4 units. Now, the only thing that I would tell you about these multifamilies is remember that maximum loan limit, right? You got to stay below that. So if you're looking at an FHA, especially if you're looking to buy your first multifamily home and you're going to be living in one side and renting out the others, your maximum loan limit is $460,000. I know that a lot of people like to think that as you're going up with your units, that loan limit within this program is going to change. No, this program and FHA guidelines are 2 completely separate guidelines. So you do have to stay below that 460 loan amount, okay? Which right now you could still get a duplex, sometimes even a triplex within that 460 gap. So you still have a good chance at being able to get your multifamily home as your first starter home, and I definitely would recommend that if you're interested in investing in the future. So manufactured housing is also permitted, but it's only for FHA and Fannie Mae conventional. Those are the only two. So technically with FHA and with conventional, you can qualify for a manufactured home. Modular homes are also permitted. So guys, that's pretty much the gist of this program, Hometown Heroes program. They're only going to be letting go of $100 million worth of funds for this program. So you need to get it as soon as possible because these funds will run out very quickly. There's a lot of people that are going to be jumping on this because, like you heard in this video, the barrier to entry is very, very low. I mean, 90 to 99% of these people are going to be able to qualify for this program that fit into those occupations because those income limits are very high. there's essentially no purchase price limits on these loans, right? So as long as you've got, think about it, as long as you've got a 640 FICO, right, and you get approved to get an FHA mortgage, at the very least, you qualify to get this down payment assistance. So this can be essentially almost anyone that you know. I wholeheartedly believe that by the time this is said and done, you're going to know at least one person, whether it's yourself or a family member, that got their first home using this program. Thank you guys. This is Mike with Highlands Residential Mortgage. Truly, we hope that you can get and benefit off of this program. We really, really hope that you are one of the people that are going to be able to close on this loan and be able to get your first home because of down payment assistance. We're pushing home ownership, especially in South Florida and in all of Florida. If you like this video, please subscribe. We're going to be coming out with more of these in the future. Peace.